Now, so let's come into our discussion and then begin the discussion for the day. So we are still on IAS 33, earnings per share, okay, as a basic issue. And as you heard in my introduction, we've looked at the diluted earnings per share discussion in episode 1 with an episode 2. We've looked at the right issue, how we calculate the earnings per share when there is a right issue. So now we want to go into bonus issue. So when there is bonus issue, how do we calculate the basic earnings per share? So that is where we want to start the journey from today. So bonus issue. Now, bonus issue simply refers to the issue of free shares to equity shareholders. That's all. Issue of free shares, technically, to equity shareholders. That's what we mean by bonus issue. So what does that mean in principle or in practice? It means that we are converting reserves into share capital. That's all. Reserves are being converted into share capital, and this is very common when an entity is seeking to increase its stated capital. They can convert reserve into share capital, especially when the banking sector cleanup and recapitalization was done here in Ghana, raising the minimum capital from 120 million to 400 million Ghana cedi. What happened was that many of the banks didn't have to inject new cash to help them move from the significant cash to help them move from the 120 million to 400 million. All they had to do was to convert their reserves into the share capital so that they can meet the capital requirements, and the Bank of Ghana gave an approval for that. So certainly it's something that is common. So it means we are just giving ordinary shareholders more shares, but they are not paying anything for it, unlike right issue where they're going to pay below the prevailing average share price of the shares. In bonus issue, they are getting new shares, but they're not going to pay anything for it. Now, because it is a free share that we are giving to them, it means that anytime there is a bonus issue, we would have to calculate the bonus fraction. Again, so you realize that for the second time, bonus fraction is coming into the picture. When there is right issue, we calculate bonus fraction, and you saw the way we calculate the bonus fraction under the right issue. Anytime an entity undertakes a bonus issue also, we are going to be calculating the bonus fraction. So how do we calculate the bonus fraction when there is a bonus issue? The formula is pretty simple. It's going to be the number of shares after the bonus issue divided by the number of shares before the issue. Okay? Number of shares after the issue divided by number of shares before the issue. What does that mean? Let's give an example. So let's say that, we are told that an entity makes, a 2 for 5 shares bonus issue. What does that mean? Like I told you, under the retained earnings, 2 for 5 means we give you 2 new shares for every 5 that you are having now, existing or current. Does that make sense? So 2 for 5 means that we give you 2 new shares for every 5 that you are having in that case. So the question we then ask ourselves is, how do we calculate the bonus fraction? Stay with me. The numerator, is the number of shares after the issue. So if they did a bonus issue of 2 for 5, that means after the issue, each shareholder will be having how many shares? 7. So our bonus fraction, it's going to be 7 divided by the number of shares before the issue. How many shares were they having before we did the issue? Existing, which is 5. So our bonus fraction becomes 7/5. So when an entity makes a bonus issue and we are calculating the basic earnings per share, this is how we go by calculating the bonus fraction. And like we discussed under the right issue, the bonus fraction will only affect shares prior to the right issue. So the same principle applies here. Bonus fraction affect shares prior to the right issue. So the total number of shares after the right issue will not be affected by the bonus fraction. Only the number of shares existing prior to the right issue will be affected. That is the idea about bonus issue. Very simple. So let me bring up a very simple question as well, as it is simple, and then let's see what we can do. Now I'm taking this question from my book in financial reporting or corporate reporting. If you have my book, this is page 302 of the book, but you can also take a screenshot of it here. So what do we have? Let's see. So let's see a very simple illustration here. The requirement here is very simple. It says calculate. Let's zoom that out a little bit so that you can see it well. Calculate the earnings per share for the year ended 31st September 2020. OMG Limited has the following information. Profit after tax has been given to us to be 400,000. Outstanding shares 40,000. Pretty simple in this particular regard. On 1st April 2020, now stay with me. 1st April 2020. This should be 30th September. On 1st April 2020, the entity made a bonus issue of 2 for 1. Okay, so let's crunch some numbers quickly. OMG Limited. Let's see what we got for OMG Limited. So few things quickly. They made a bonus issue on 1st April 2020. So stay with me. If the year ends on 30th September, that means the year will start from where? 1st October. So from 1st October 2019 to 31st March 2020. That is how long? October, November, December, January, February, March. That is 6 months. So for 6 months, they were having the outstanding share of 40,000. Now remember, the nominal value of the share is $1. So it means the number of shares will still be 1. If it was 0 point something or something like that, it would have divided. But 40,000 divided by 1 is still going to be 40,000. So no cause for alarm in respect of that. Right? So for the 6 months, we had 40,000 shares outstanding. Then now from 1st April, when they did the right issue, 2020, to the year ended 30th Sep 2020, I think that will also be another 6 months. So we bring that up, and that is another 6 months. Now, how many shares will be coming? Stay with me. They said they did a right issue of 2 for 3. So we give you 2 new shares for every 3 that you are already having as a shareholder. All right? We give you 2 for every 3 that you are having as a shareholder. So what does that mean? So bonus issue, it's going to be 2/3 times the number of shares outstanding, 40,000. So we punch that out. What do we have? 2/3 by 40,000. And I'm getting 26,667. So now it means from the 1st April to the 30th September 2020, the total shares now will be the bonus issue plus the outstanding shares. So giving us a total of 66,667. So it means for the second 6 months or the final 6 months for the year, we are having 66,667 shares outstanding. Does that make sense? That's very important. So that's the starting point. Now, because it's a bonus issue, before we can calculate the weighted average number of equity shares, we need to calculate the bonus fraction. So our bonus fraction, if you remember, we said the bonus fraction is the number of shares after the issue divided by the number of shares before the issue. Now, since the bonus issue was 2 for 3, that means after the issue you now have 5. So it's gonna be 5 over the existing 3. That's our bonus fraction. And like I told you under right issue, and we won't punch this out, because when you punch this out, you have to approximate it and you are going to be working in decimals. So you want to leave the answer like this because we're going to work for it later on. So now that we have our bonus fraction, we have the shares, we have the number of periods, we can then calculate the weighted average number of equity shares. So we bring in the period if you want. We bring in the outstanding shares. We bring in the bonus fraction. We bring in the timing ratio. Then we get the average coming up. Sounds good? There we go. Give me a sec. Let's see if I can bring my slide a little bit up like this. Let us go up a little bit. Okay, so let's go. Let's zoom back out. So the period, we have the period here. So I'm just going to copy it, as you know already, as a lazy boy. Just going to copy it, and then I'll make it a little bit smaller just to fit into my slide. All right, something like that. All right, so the outstanding share for the first period, we said is 40,000. The outstanding shares for the second period, 66,667. Then the bonus fraction will come, which is 5 over 3 here. Okay, 5 over 3. Then the timing ratio, 6 over 12. Bonus fraction will not affect shares after the bonus issue. Okay, that is why we said the bonus fraction affects only shares prior to the right issue. So after the right issue, the bonus fraction will not come in. Timing ratio 6 over 12. So we multiply up. Remember, we are multiplying everything. That is what is giving us the average. So we multiply up 5 over 3 by 6 over 12 by 40,000. Let's see what we got. 33,333. Okay, then we look at the second one, 6 over 12 multiplied by 66,667, and that is probably 33,334 approximately. So we can then add the 2 up, and that gives us the weighted average number of equity shares. Weighted average number of equity shares. So 33,333 plus 33,334, and that is 66,667. Okay, 66,667. Now, like I tell you always, don't get any ideas and say, oh, if that is the case, it means that the total share after the issue will always be the weighted average number of equity shares. No. No. This is just a coincidence. It may not happen all the time. So you pay attention to the concept and the way we do the calculation. So now that we have this, we can calculate our basic earnings per share. So our basic earnings per share will be our profit after tax divided by our weighted average number of equity shares. And we can work that out. Profit is $400,000. The weighted average number of equity shares we just calculated, 667 shares. So we punch that out to get our answer for the period. Let's see what we got. 400, 1, 2, 3, divided by 66, 667. So I'm getting 5.9, probably $6. Probably $6. Because it's 5.9997, so we can run and make it just $6 in that particular case. So that is how we deal with bonus fraction. Now, usually, that's how we deal with bonus issue. Usually, when the bonus issue occurs at the beginning of the year, then there will be no need for us to do any timing ratio thing. So if the bonus issue occurs at the beginning of the year, all we would do is that, because usually if there is no date in the question, the assumption for bonus issue is that it will be done at the beginning of the year. That's the assumption. So if it is done at the beginning of the year, so when the bonus issue is done at the start of the year, then your weighted average number of equity shares would just be the outstanding shares plus the issue in respect of the bonus issue that we had. That's all. So if the bonus issue was done at the beginning of the year, no problem. You don't have to come and do any of these issues coming in, because we are just going to be assuming usually that it is occurring at the beginning of the year, and so we will not apply the timing ratio in that particular case. And as we move ahead and solve some questions, you're going to see how this actually plays out. But that is all about the bonus issue. Very sweet, simple, straight to the point. So like I keep on telling you, it's all about the principles. When there is right issue, we have to calculate bonus issue. And if you remember, under right issue, the bonus issue is the current share price divided by the X right price. And the X right price, you have to calculate for that. But when there is a bonus issue, all you have to do is the number of shares after the issue divided by the number of shares before the issue. And that gives you the bonus fraction. And the bonus fraction affects only shares prior to the right issue. The bonus fraction affects only shares prior to the right issues. Okay, so that's the idea about that.